issues with our high-speed internet, and even though I'm plugged in directly through Ethernet to CNBC via the high-speed connection, there was a problem today, and so I think I spoke for 2 minutes out of the hour. Nonetheless, I am delighted that you have joined us, and let's get started with today's 3 at 3. 3 at 3 presented every day at approximately 3 p.m. Eastern, 3 p.m. Eastern, 2 p.m. Central. Still gives you an hour to trade if you so choose. Our disclaimer is that if you choose to trade, that's you acting of your own volition. That this is being presented not as trading advice, but as educational and informational offering only. All investments involve risk. Intellectual property rights, yes. The content and design of this material, virtually everything you're about to see is either copyrighted, trademarked, registered marked, or patented in the case of the process, how we get to the heat seeker activity. So please ask us before you reproduce it in any fashion. Let's talk about SLV, which is silver. SLV, this is a pretty big trade. And as you know, I always remind you that every option is for 100 shares of stock. So when we see 28,000 options changing hands, that's 2.8 million share equivalent. Every option's for 100 shares. So just add 2 zeros to that 28,000 and you get 2.8 million share equivalent. And they paid about $2.02 for these calls. So what do we know? Number one, we know the time frame between now and April. They wanted time. They didn't think it was a short-term trade. Number two, they also bought out of the money by about $2. So let's say 8.5% out of the money. Also noteworthy. They think maybe it makes a pop or a surge to a level like that. That's very possible. Let's take a look at the silver ETF and see how I chose to play it. Remember, those were April 2750 calls for $2. And so what did we do here? We were looking at a trade. One trade that you could do would be out in June for the SLV. You could also do April. I chose to do the 25s against the 2750s. Now, both these spreads, I think April and June were about the same. I don't have a preference really. Just thought I'd show you that instead of spending $2, you could put 85 cents or thereabouts on the table and say, you know what? I think that this thing probably goes up by April. Again, April 2750 calls was what they were buying. I think it goes up by then, but what if I gave myself more time for nearly a triple in the market? So you could buy April. That's what I bought. But for those of you who have texted me, emailed me, and or spoke to me on Twitter about, well, what if I'm a longer term investor? This would be one way to play it with the stock right here at 25.64. These calls, the 25 calls, would be approximately 64 cents in the money already, and you're only paying 85 cents. So you have a lot of upside on the trade, and as always, a directional trade, even if it's out in April or May. Pretty good idea, the way I trade, to have 1-to-1 bull call spread on. For all of you who have joined our legion of subscribers on Market Rebellion YouTube channel, thank you. You can go to YouTube, type in Market Rebellion, and then it would give you the opportunity to click on that upper right-hand corner to subscribe. It is completely free, and then you'd get my 60-second video in the morning. It's, of course, out on all the socials, Instagram, LinkedIn, Facebook, and so forth. You could also get 3 at 3. You get Pete's The Take, and you'd get those every day if you just go to YouTube and in the search bar type Market Rebellion. Second trade on 3 at 3 is GEO. So bullish call buying. These guys are a play on private prison systems. Bullish call buying, stocks up to $7.71. They bought 10,500, which is 1,550,000 share equivalent of GEO. So they bought 10,500 calls. And those April 9 calls, they paid 25 cents. There's GEO. It's up almost 6% to 775. It was 771 when we cited it. And there you see some of the specifics. It's just under $1 billion market cap. This stock was double this price 6 months ago. Michael Burry, you remember him from The Big Short? He was buying this on his most recent disclosure as well. So that's the second of our 3 at 3. Third is SOXS. No, not the dog, the presidential dog, but SOXS. This is a triple levered inverse of the semiconductor ETF. So in other words, if you were somebody who thought that maybe semiconductors, like for instance our friend Stephen Weiss, if you thought that you might want to take advantage of that and bet that perhaps after a furious run and an inability to match supply with the demand there is for chips, that maybe chips take a break. That's what it appears this trader was doing. They bought above the market, marched 60 calls for 50 cents. That ETF, again, it's triple levered inverse. So this goes up as semis go down, triple the speed. So this one, there is a look. It's back. It's up to 1242. It's a nearly 14% jump today. And as you see, lots of room to run because just back in October, this was 38 bucks. It has fallen to 1242. And again, fallen means that the semis have rallied furiously. So somebody that maybe wants to hedge a portfolio with exposure to semis is buying this as that hedge, because talk about leverage on leverage. You're getting a triple levered ETF and you're putting options on a triple levered ETF. Bang. Now let's get to some questions, shall we? Questions can be directed to @Jon Najarian at Twitter or at the number 3, the word at, the number 3 _ UOA. We always try to offer that for all of you who are listening on Sirius Satellite Radio. Thank you. EEM. Okay, Jeff Monty. And Jeff's handle on Twitter is at NYC Monte, MONTE. Hi, John. What's your thought on the emerging markets ETF rather? And I've got lots of thoughts on it. I think it goes higher. I like it. I think it outperforms this year. And just to show you, a week or so ago, maybe it was, I think just within the last 10 days certainly, we had a very bullish call roll with the EEM at 58. They bought 71,000 March 60s. So that was approximately $2 out of the money. They paid 66 cents. So to give you an idea, Mr. Monty, that's what we're seeing. 71,000 contracts is 7.1 million share equivalent of the emerging markets index. CRISPR Therapeutics, CRSP. This comes from Farmer Josh. Hey, Farmer Josh. I think you've been on with us before. Farmer Josh, that's FARMERJOSH 69. He says, you know, John, and 3 at 3, CRISPR, gap fill? Certainly looks that way to me, Farmer Josh. I looked at it. I think we peaked at over $200 middle of January, and now here we are at mid to high 120s. So yeah, it looks like that was an attempt to fill that gap, and time will tell. But yes, very interesting trade there. Thank you for keying us in, Farmer Josh. Michael Wilner, that's at WILNERM, like Michael, 2. Hi, John. What's your feeling on DraftKings ahead of tomorrow's earnings? I like it. It was kind of tough because as much as I like it, they let me down on the Super Bowl. I only got half my bets in. Couldn't get my bets in on DraftKings, and I was bummed. So I wonder how many other people had similar problem. Couldn't get those bets down. And we'll see. I think it is a great platform, though. And I think DraftKings, Penn, Caesars are all great picks in the space. NEO. All right, Chris. And Chris's handle is @Pana, P-A-N-A, _ Chris, C-H-R-I-S. Hi, John. You've been one of the only guys on CNBC that has believed in NEO from the beginning. What are your thoughts going into earnings Monday and the 10-year going up? Chris, I think the 10-year going up, as you've heard me say, and I didn't get a chance to say it today because of that connection problem I talked about, but I'm one of the guys that you might recall was not as taken with the market and had lightened up significantly in my stock positions and had instead simulated longs through call options. I do that, Chris, when I think that we're at a inflection point and about to turn. Rather than losing money on puts that might just evaporate, I chose to take money off the table in my non-taxable account by selling out a bunch of the stocks, either in part or wholly, and then putting on call spreads and or rolling down, like you heard me say last week about Apple, rolled down to those 130s, and I'll probably be rolling down yet again to get a little more protection. Not that I don't believe in it, but I think Buffett kind of caused a waterfall when he, through his 13F, disclosed that he had been lightening up on his Apple. So NEO, I like it. I like XPEV. I like LI. You know I like Tesla. I have taken almost all of them down substantially, however. So that doesn't mean that I don't believe in them. It just means that I think they're vulnerable. All of those names that I just said, I won't repeat it. And I think the 10-year going up is going up too far too fast, and that this will be something the market has to deal with. Ultimately, when you look back at charts and look at where the market was when interest rates were 1.5% or higher for the 10-year, obviously we can still go up. But I think in the short term, this hurts us in particular because hedge funds are selling. This is not retail selling. This is hedge funds and big institutions selling, playing what they know has been a pretty dependable pattern when interest rates go up this much about what happens next. One more push to subscribe to our YouTube channel. Go to YouTube, type in Market Rebellion in the search bar and click subscribe. Thank you, folks. I hope wherever you are, you're having a good day. I will be back on the halftime report and back with 3 at 3 tomorrow. Until then, adios. Have a good night.